What's up, everybody? I am back with another edition of the Sunday Scaries Stock Talk podcast. But before we get started, I want to take a special shout out to Financial Stock Data at financialstockdata.com. You can use promo code GCI, as in Green Candle Investments, to get the first month of their premium service free. You can look and analyze stocks and get them on your watch list, put them on your radar, get all kinds of financial metrics and much, much more. So be sure to check them out and use promo code GCI in order to get the first month free. And now, for my guest, I have Yegor from 100K to 1 mil on Twitter and Common Stock. Yegor, how you doing today?
Hey, Brandon, I'm good. Thank you for having me.
Of course, of course. So we kind of got introduced, I guess, through like Twitter and Common Stock, which is kind of like this new platform of like sharing ideas and everything like that. But I want to kind of bring it back a little bit. So, how did you kind of get started in investing, and what was, I guess, the pusher that got you into just investing your money and trying to grow your wealth?
So around 2019, 2018, I got more into individual holdings, curious, just buying all the known stuff like Apple, Microsoft, things like that. Large cap, not too much volatility, not too much things going on. And pretty much from what 2018, 19, stock market was going up. So I thought I'm doing pretty well for what I was picking. But then what really triggered in 2019 in August or September, I took Phil Town's course seminar, 3 days, where he talks about investing like Warren Buffett. So until to that point, I have no financial background. I had nothing to do with Wall Street. I have my own business that I run, and um, but that there was just something about the way I heard of Warren Buffett before, but never exactly what he does. And when Phil actually goes through the process, it just clicked to me like that makes sense. You buy businesses, you don't buy like tickers, and that really he really laid out it nicely. And from there, I decided going into 2020 without knowing what we're gonna have, like the pandemic, whatnot, that I want to see if within like period of 5-10 years I can take my own money and actually follow the journey and see if I can actually do this full time. So transition from what I do right now to investing, to have a little more flexibility. As you might see on the background, I there's like kid stuff, whatnot. I have two little daughters, and I would like to really spend more time with them, but also uh, do this like be more flexible with my time because right now I'm pretty much just workaholic with my day job. And that was kind of the push of getting into investing, actually being conscious about the holdings and the process. And with that, I started the Substack and just doing it as a semi hobby, but also to see if I can actually do this full time without having any real financial background.
Gotcha, gotcha, and that makes sense, right? So I kind of did the same thing, right? So but I think it's interesting your path that instead of maybe reading books or listening to podcasts, you decided to take a seminar. So what kind of brought you to this seminar, and like would you recommend going to a seminar for maybe a newbie that's like kind of worried or trying to figure out how to get in?
So I'll be honest, the reason I did take it is I won a free voucher, I guess. All I had to do was pay for the flight. So he's located in Atlanta and he did it in his not too far from his like farm. And I actually was a little sketchy that maybe they're gonna try to push products and sell courses. There was none of that. So I'm not endorsing what he did. I'm just giving my experience. But doing an actual seminar and now knowing it, doing it with the person that actually cares of teaching, it was a nice um, building blocks, because until that point, all I really know the stocks. You buy them, you sell them, and if you do it well enough, you make some money. But the fundamentals, I think it's important to have somebody guide you through the process, but also do it the right way. So I did start reading some books and listening podcasts, but with seminars or webinars, you can actually ask questions. You can actually interact. So my own personal experience, my questions are usually not the normal question. They're not good or bad. They just, I sometimes think a little differently. So the question that I might have, uh, and if nobody else asks and nobody gets to answer it, I'll never know the answer. And I think just if you can do seminars, uh, first, I guess, make sure it's the right, like the person not trying to screw you over just to make, because there's a lot of on Twitter and Instagram, there's a lot of people who pushing things that they're just trying to make the money. They're not really trying to teach you. So if you have somebody who will actually provide you knowledge and maybe charge for it, but you got to get something out of it.
Yeah, I agree with you. And I think, like, for me personally, I've always been a little wary of courses just for that reason. But I can see it on the flip side. Like you said, I know, a lot of the books I read or podcasts I listen to, they talk about getting mentors. And sometimes that's difficult, especially in the, just the stock investing space. Maybe real estate or some of these other ones, people are a little bit more open, but I feel like in stocks, it might be a little bit more difficult, especially for somebody like you or I who don't really have like a finance background or a studying finance or something along those lines. So I could definitely see like the value of just going too, because I think a lot of self motivation comes from like reading and listening to podcasts, but there's also something to like, hey, I paid for this, or I'm going here for 3 days just to learn this stuff. And so, like, maybe you absorb it a little quicker and it's a little bit more efficient with your time. So I do think that's interesting, but good on you for getting started. And I guess winning that free seminar and everything like that, too. So you started in 2018. It's definitely a little bit of a different time right now. You've seen kind of the COVID crash, the COVID run up, and then now another somewhat of a crash. So what has it been like, I guess, investing, like getting started and kind of dealing with this massive amounts of volatility? Because I know you said initially that you were kind of going for these big cap stocks, which maybe weren't as volatile. But has your strategy changed due to some of the, I guess, market conditions that we're in right now?
So I definitely can say there are a few things. I guess 2020 and now getting some real volatility under my belt. Until then, I didn't think there was any major drops that I can think of right now that were more than 5% overall in like even 17, 18, 19. Pretty much, more or less market was going higher. And there was not much volatility. The one thing that I started doing before even learning about value investing, I always try to vote on some sort of like bad news on good companies. So without really knowing a lot of details to see if this company will survive. And before actually investing in any of them, I see a few of them that I saw. I think it was Raytheon, and there was a few other. They did like uh, spin outs and such things, and I see that the value always would come back if companies were not over leveraged. Uh, and I've been told and taught that as long as company doesn't have debt, they can't really go bankrupt. Uh, and that was like the starting point. But I said in 2018 is when I really started the journey, and I decided to be real with myself and open-minded to knowing that this will not go forever. but also that I have to be conscious of my mistakes or of what's going on in the market. So when 20, so around 2020 is when I actually started transitioning some of my money from ETFs into Webull to actually individually manage the money. And I was doing the selling actually before the crash. So before the market really dipped in 2020, um, about 50 or 70% I was in cash. And the rest I was actually selling from one, I guess, broker and moving money to another. So sort of timed the market, but not on purposely. But I also was really conscious that when the market was going down, there was a lot of uncertainty. But I was also running a business, so I had to focus. I have about 10 people working for me, so managing that inconvenience of people were scared, and but I was never at any point scared to lose money in the market. I bought the companies that I believed in the long run they would do well, and I just kept buying. Uh, so I think there's art to it. The process as it's going down. I guess some call it buying falling knives, but I believe that's how you also generate different alpha. The base points that you have the difference. The lower you buy, and then it goes back up, you have a better price point. And I mean, you just gotta be honest with yourself as it goes down, feel your emotions. And I personally was not, I mean, I felt a lot of discomfort. Like, I think I was down at some point, 20, 30%. And it's my own personal money. It's whatever I have. So, if company go bankrupt, I lose all the money. That's not something I want. So I'm really cautious about not losing money before I even make money. And where I'm going with this is you gotta know what you invest in. So if things hit the fan, um, you you are okay with things going lower. Maybe that means you have some sort of a cushion, so the money that you invested you don't have to touch. But also, I think it's psychologically you have to be prepared. So not a lot of people psychologically ready for big moves up or down, and I just feel like people in general are not wired for that. So you have to yourself prepare for it. Like, do you remember how you felt during the crash of 2020?
Yeah, I mean, that's a great question. I guess a little background on me. So I started investing in like 2016, but I was still in graduate school, so I didn't have a bunch of money, and I was using this probably similar something to what you were doing, but it was a robo investor called Acorns, and essentially what that does is it allows you to round up, you spend $9.50, it rounds up to $10, and it invests that 50 cents for you into like general ETFs. So I use that, and then I kept putting money in there as I got through grad school. And then in 2018 I got my first big boy job, and I started to invest then. Um, and pick individual companies, and I even got into a little bit of Bitcoin as well, and I still hold that. And when it started to crash, it just kind of made me realize, like, okay, if I truly believe in these companies, it's more of a macro event, right? So it's not necessarily the companies are doing poorly, it's like everything is doing poorly. And that's kind of how I view it now, is that, okay, there's a lot of outside factors that are going to affect a company. And so if I truly believe in these companies long term, now's a great time to buy. And I think, like, you're kind of nailing it on the head there, is like, you have that little bit of that anxiety when you see like losing money, especially when you're first getting into it. But I think now more than ever, it's more important to have conviction behind your investments, because if you truly believe in the company and you believe in the management, how it's run, the product, what have you, you can kind of ride some of those more volatile waves. And from there, you can make some good money if you pick the right companies. And I think it just kind of starts at the beginning, right? It starts where with going through the fundamentals and understanding it too. But um I think too, it's also recognizing like when you make a mistake or recognizing that you can make a mistake. So it's also, I think, like a little bit of the mindset too, like invest what you like aren't afraid to lose as well. So I think like, those two kind of factors helped me a lot, kind of going through that crash. And then, now we're kind of seeing it again. And everybody at the bottom of COVID when everything started running up and they printed money, kind of felt like a genius. But now, I think like kind of like along the same lines where it's the same principles where you got to figure out why you invested in those companies in the first place. So that's kind of my answer to it. But I kind of want to get into your strategies too, because you talked about Warren Buffett and a little bit of value investing. But on common stock, which is a really cool feature, is that you can put in your portfolio and it can kind of help you track. So one interesting thing that I see on yours is that you use both options and long-term holdings, or at least what appears to be like long-term holdings. So what like I know options is kind of like going through a fad, or a lot of people are more talking about it maybe than a few years ago. But describe, I guess, your experience in options trading, and like, would you recommend somebody that's new and getting started, kind of getting into options to kind of help, maybe capitalize on some of this volatility?
So I just wanted to mention that around when Acorn started is when I actually also that was really the beginning. Like the real beginning was with Acorn myself too. Um, and then like slowly I transitioned to other things, but real start was for me to Acorn with the whole change difference. Uh, Options, I believe there's two-way like investing. Put this everybody thinks there's two-way of investing. You can do like growth or value. There's always like yin and yang, two stories to the coin, two sides. So I think there's two ways of doing options. One is you can trade options, meaning you can do momentum, and that's, for me, it felt that's what everybody was doing in 2020, 2021, just doing call option, buying call options, and then hoping somebody else would buy off them to make a profit. That's like the GameStop, AMC, all the fun stuff. That part I never really understood. Like honestly, I tried to do it. I lost money on it. I gambled a little bit, and I did a few of them. So you actually buy contracts, and then you hope somebody else buy them off of you. So if nobody buys them and they expire, you lose money, and that's what happened with me. So they just expired. So I paid for them, and it was like $100, and I was like, oh, this is sucks. I don't like this. This is pretty much you just I lost a little bit of money, so $100 is, I mean, it's not that big amount, but I was like, that sucks. Like, I could have put this $100 into some sort of other investment company and just kept it. So my way of doing it is actually selling uh, puts. So what it does is, let's use one of my holdings that I have right now. If you go on Common Stock, you can see that I have LKQ. I have sold puts on for July for a small premium. So I actually keep that premium. So instead of losing that $100 or whatever with the calls, I actually kept a little bit to myself. But the trick is, if it goes below a certain point, I have to take those shares from somebody on the market. I don't know that person. But I'm actually okay with that because the price I put in for those put options is the price that I want to buy this company. After doing all the research, doing everything, this is actually like, if it goes to that price, I think right now it's at $25, and stock is trading right now at 40, 45, 48, depending on volatility. Uh, if it drops 50%, about 50% from current prices, like I would love that, because unless some sort of fundamental change happened, um, which it could due to, with all the macro plays. Even though I say I don't do macro, when I actually start thinking about it, there's actually some thinking I do. Uh, and if it goes past the point, the date of July, then I just collect the premium. So there's a person, I forgot his full name. He's somewhat popular on Twitter. He runs a fund. Last name is Patterson. So I think if you go through like YouTube or Twitter, Patterson Fund, you'll find this. He really talks about a lot the strategy, and much better teacher than I am. But that's what I like to do. I like to collect the premium actually on the options. So let's say I don't have the stock ABC and it goes to 25 and I get filled. I'm happy to own it at that price, because I actually um, was looking for this. So I actually got a little pay more. Caveat to that is you don't want to really do it into any kind of events. What I learned, my lesson with my tech, I did uh, price point at 10 and it was trading at around like 12, 13, but then they had earnings and the stock went to 9. So I got a small premium, but I also bought a little higher than I would like it. It happens, but it was the price that I wanted. The other side is selling call options. So that's already you own the company. So with like AMC's and GameStop trades, those individuals, they never hold it companies or stocks. I would sell it to somebody else, take the profit, be done. Here, you actually will sell your um, stock to somebody else. Again, you give it a certain price range that you're comfortable selling, and somebody gives you a premium for that. And this is where I think you can collect the small premiums that in the long run can be some alpha. Um, that's the strategy that I use. I said, Peterson, if you Google it or YouTube it, explains it really well. He does it on much better scale. That's really what also Warren Buffett does and Phil Town does. I didn't make this. I just copy it. Uh, but why not copy things that work and that people that are successful and actually make money out of it share the ideas? And that's my play on options. And I believe that's really being conservative, because you pretty much aware of the things that you do. So you're not trying to sell it to somebody else. Um, there was somebody that I know at work started explaining the options like the way they did it in 2020. And when he explains it, I wanted to do it. Like the way you do this and you make a lot of money, it sounds awesome. But personally, when I actually tried the experience, I just realized it's not my thing. Like same thing like with trading. Some people are really good at trading. I did some trading before and I just found it's not for me. So you have to find what's right for you, the strategies, and just stick to that.
Yeah, and I agree with you there. I think like just kind of understanding what you want out of investing, kind of can help you a lot. And it seems like, you kind of have a little bit of a longer term outlook, which I think is good because, trading options has been kind of like, it almost seems like it's kind of being publicized as like a get rich quick scheme, but it seems like you're using it more for building long term, which is interesting. This is kind of like the first time I've heard it described this way. And, I like it. It's just, for me, I don't know if I understand enough about options right now. Sorry, excuse me. But, yeah, it's definitely something that's intrigued me and something that I want to kind of dive into a little bit more, especially as things become more volatile and maybe I have a little bit more invested in the stock market as well. But you said you started off with the acorns and kind of like the long-term strategy. So you've mentioned Warren Buffett already. So do you still think like you kind of have those value principles? And do you think like value stocks have kind of been hurting recently with the COVID boom and everything? Maybe these growth tech stocks have kind of been booming up. Do you kind of see, I guess, more of a comeback for value as maybe money gets a little bit harder, and some of these companies now don't have as easy access to capital?
To me, when I say value, I don't say like P of one to some coal mine in God knows where. Uh, to me personally, at currently is I might get some crap for it, but Spotify is a value, and it's technically a growth stock. So I don't really see it separately, like growth from value. I think they're both um, really at the end of the day, it's the same thing. So you buy something at a good value that over time will grow, if that makes sense. And so I never really, since never got the education of financial like the way the Wall Street does, I never really picked on any like specific mindset or frame of thinking. And for me, I don't care if the quote unquote the stock is growth or value. I look at the fundamentals of the company, and I also trying to get if I can understand it and see it long term growing. So, like I have Spotify that's really beat up, and pretty much all the growth companies are beat up right now. But you have to like start digging deeper into separate good companies from bad companies. And I think one thing I want to point out is the rule that I have for me, I don't invest in companies that have less than 5 years of data. And I broke that rule with Opify, and learning that lesson. But also, I got to stay away from a bunch of growth names that everybody getting really upset about. But they never gave enough data for me to believe into the story. And so this way you can also stay away from a bunch of things when you set certain rules and you follow them. Going back to the value, like I think everything in my portfolio is in value. But I own PayPal, I own Spotify, I own banks. Maybe banks not really growth right now, but if the interest rate keep going higher and banks can adjust to it properly, and we don't have any major like crazy recessions, at some point banks I think should do well. Will they? Time will tell. So I never been really into like one camp or another camp. That's why I know I never be any like Warren Buffett or even close to him. Uh, or the type of hedge funds, because they have certain way of their doing things, and I'm just learning my own. So I'm just picking a bunch of different things and like creating my own style, and it works for me. So that's what I have to say.
Yeah, I mean, I think like at the end of the day, it's finding a strategy that works for you and kind of helps you like sleep at night, right? Because that's the biggest thing, right? So if you're copying somebody else and you're just doing it because of somebody else, eventually you're going to kind of freak out and be like, okay, well, I don't know why they did this, or if they messed up on a stock or something, then you have somebody to blame and then you're upset at them, and it just kind of goes down this dark spiral. And I don't think that's, a good way to kind of look at it or go at it. I think everybody can kind of educate themselves and figure out a way to invest and what way works best for them. And I think, that's exactly what you're saying is like, I've found a way that works for me and a way that I think that, it is going to help me and benefit me long term. And so, maybe you aren't as, good of a stock picker as Warren Buffett or somebody else, but at the end of the day, you're doing what you believe is working best for you, right? So,
I
um,
think, if I may, you point something, sleeping well at night. A lot of, even like, of hedge fund people talk about not being sleeping well at night, and then there's others on the same level as them, and they're saying they're sleeping fine. That means you're doing something maybe a little out of your comfort zone. And again, it comes down to human nature, human minds, and at the end, we're all humans. So we all think, we're all scared of things. And even like some famous rich hedge fund individuals, they're still people. So, they still have to worry about certain things. Um, like, I think what Warren Buffett did is he learned what works for him, and he just sticks to it. Bringing, Bitcoin. There's some people that are going crazy right now because Bitcoin is falling, and I nibble in Bitcoin a little bit around 2020, 2021, made a little bit of profit trading, but I learned that I actually don't sleep well at night when I hold too much Bitcoin, and I just don't hold that much. I think before this crash, I sold whatever I left for a little, like, minor loss. And I feel great because personally, I just realized it's not something I'm willing to hold right now. I don't have conviction personally. And there's nothing good or bad about it. It's just the way it is. We probably know some people on Twitter that are really big Bitcoin fans, and maybe they're okay with this volatility. That's their strategy. It's fine. There's multiple ways of playing this game. You find your way, you stick to it, and I think the real point is to stay as long as you can in this game. So if you get call margins tomorrow and you're done and you can't rebound from it, there's no second life in this. It's not like a video game. I always think of comparing it for myself because I used to be big on video games. There's no, there's no respawning. Once you get margin call, most likely you're done, and you'll probably get a bad taste in your mouth, and you're not going to want to do it again. So if you can find what works for you and invest that way, I think that's the best way to do it. I don't know if people will agree with me, but I think that works for me.
Yeah, no, I agree with you. Like at the end of the day, I think everybody can kind of argue what they think like the method is better, but like, like you said, like I believe in Bitcoin, so I'm fine with holding it and with going through some of that volatility, but like I can perfectly see like other people if you don't understand it or you don't like, the volatility swings might get you or what, like it's not worth losing sleep, right?
Yeah.
For like maybe the gains or, maybe you view it as like a get rich quick or something along those lines. Like at the end of the day, even if it comes down to like a company, right? So like if you hold Tesla, for example, or something along those lines where it's like, hey, like it's going up and or maybe it's like an AMC or a GME where a lot of people are making a lot of money when it's going up or losing a lot when it's going down. That, you get a little nervous and you just don't really sleep well when you have those. So it's not really worth, the money that you could potentially make because at the end of the day, you're just unsure. So, I agree with you there 100%. And I think that that's, an interesting aspect of your strategy as well. And so, before we kind of dive into some of your holdings and some of your, how you think about investing in the long term, what do you think is like the greatest, I guess, mindset or like thought that you have that's kind of helped you ride some of these waves and that's kind of like helped you hold on to some of these companies and keep investing your money, even if like maybe overall your portfolio is down or something like that?
So I guess two things. One, I have read and listened to a lot of audiobooks or podcasts of actually famous quote unquote value investors. And whenever they speak, trying to learn from their mistakes and years of knowledge. So obviously, if they're doing it for a long time and they're successful, they did or doing something right. So we can always learn from them without even speaking to them. And especially like during these times, a lot of them they speak um, on the current matters, and you can use that as a guide to see how much you should be nervous or less nervous, kind of like a metric, on their level. So a lot of them they're fine of speaking. I hope at least that they're speaking their truth. Um, so that's one way of doing it. And big thing I learned is checklist. So I have a checklist of honestly I don't know how many things, but all those things are important to me. So if the company checks off on all the levels and I'm invested in it, that means I'm already there's conviction for me. Big one is debt levels. Um, for whatever reason, it really got to me to the point where like too much debt and I don't feel comfortable. The only exception to this rule right now is Warner's Discovery uh, Warner Discovery Company, the merger between HBO and Discovery. They have a lot of debt. That's because the way it was structured. So that one, I'm just sizing it properly. So in case things do go bad, um, I'm okay with that. But otherwise, I don't know. It really, to me personally, does come down just to know what you own. If something comes up and you feel like you are not prepared for it, um, if you get burned once, I think that's fine, but you have to learn from it. So if that's one thing that you didn't expect before in a bigger picture of the company, you have to have it not to be burned again. So um, again, I only speak from my experience, and that just been big, like baby steps and slow and steady wins the race. I think that's just maybe I just the way I'm built. I don't look for a quick profit. I don't think that I actually played the lottery uh, like 2 3 weeks ago. Just bought a ticket, and I felt bad because I didn't win anything, and I spent $2 on it. And I was like, again, going back to that call option play, like I was like, man, I spent $2 on this. Could have bought something else in stocks or something. Maybe just the way I think. You have to have your mindset set the right way. How do you know how to set it up the right way? Is by experience. You do things, you learn from them, you realize it's okay to make mistakes. You learn from them. Even better when you learn from mistakes of others. So again, listen to podcasts or doing webinars or reading books from successful people, or maybe not even not successful in the terms that they got burned. So you learn what they did incorrectly and you don't repeat it. And I think that's one of the biggest things that I could say. If you have that set correctly, everything else I think will be a lot easier to deal with because you have clarity. You know exactly what you're doing.
Yeah, exactly. And so, on that point, you kind of talked about like looking in books and kind of getting in your strategy and understanding your holdings. But part of that is figuring out some information and kind of maybe the sharing of ideas with whether it's like FinTwit or Common Stock. And it seems like that has kind of been popularized in the last few years or so. So what I guess what do you think of like a lot of these new platforms like coming up, and I guess the sharing of ideas from like maybe like retail and pro investors to each other? Do you think like that trend is going to continue, and do you find it as a useful one as well?
I tried a few platforms when they were just popping, especially during the 2020, 2021. So far, the one that I like the most is Common Stock. The one that I think is a lot better is Twitter, but that's because Twitter has the volume of people. But also, Twitter can be a little bit of a negative place in terms of the way people share. Some people will share ideas and then somebody comes and just bashes it without respect. And I feel like on Common Stock, there is none of that for now, and I hope there is none of that in the future. So far, everybody, you can respectfully disagree with people, uh, but don't have to like call them out. And if somebody is down, don't keep beating them down. And there's just so many other platforms. They just, I don't know, maybe they looking to grow too fast, and with a lot of growth, you get some bad actors. And so far, I personally use only Common Stock and Twitter. And Common Stock has, I feel like, a lot of what FinTwit does, but without the negativity. And sharing ideas, um, here's the thing is, I'm okay with sharing ideas, but I also uh, feel like people have to do their own research. So I don't want to just put everything out, not because I don't want somebody invest, but I want people to learn why they're doing something. So if something happens and the stock drops 50%, you're not scared, but you're actually buying more rather than just sell out because you don't know what's going on. And sometimes I feel like maybe I'm not sharing enough of like details, but I feel like everybody has to, like the last mile has to be done by you, not somebody else. And Common Stock also has a lot less noise, I think. But that's the two that I mean, I used to use a little bit of Facebook, Instagram. There's just the financial is not that well too much, and there's just too many people pushing like their subscriptions on me. So I stopped doing that.
Yeah, I agree with you there, and I agree with I guess the niceness behind common stock, and I think a big reason of that is just because people kind of share their holdings, and so like you can see if somebody has an opinion on it, they actually have their skin in the game, right? So I think with that and a little bit more of like maybe long form text, so you can get like a true thesis opposed to the character limit on Twitter. I think is good, but like at the end of the day, Twitter just has so many more people on it too right now. So, and it's more of a popular platform. So I think like there's definitely room for platforms like Common Stock, and I think the sharing of ideas is definitely going to kind of keep going on. And so,
And
uh,
if I may add a little bit,
yeah,
as
go ahead.
you said about uh, sharing portfolio, like it's actually verified. So uh, on Twitter, there's some people that constantly share their portfolios of tickers and um, how many shares, like the percentage of shares they have. Uh, but it's not really verified. So I mean, you can believe it's true. Why would they not? But somebody pointed out to me a while ago that you know you can put all this out on a consistent basis, but if there's nothing to verify it, people still will not really believe it. And here, like my personal portfolio is there. I don't really know if anybody looks at it or how many people look at it, but whatever I say, whatever I do, you can always take a look and it's right there. Like I literally have whatever I say, whatever I do, it can be checked. It's all there, which is really nice.
Yeah, I agree with you 100%. And now, because of that, let's kind of dive into your holdings because you do have the public one out there, and so I think there's a couple interesting ones that I kind of want to talk about. And first off, I want to talk about your largest holdings at VMD. Is the ticker VMED? VMED?
VML, yeah.
Yeah, VMed Healthcare. And as always, remember it's not financial advice, and everything that we say here is just strictly opinion. And we're just kind of going through his mindset of why he picked this stock, how he found it, all that kind of stuff. So, like I said, do your own due diligence. So, let's take it to the beginning. So, how did you find this company? And how did you decide, or I guess start to look into it to be like, okay, like maybe this is a company that I want to start it, I want to invest in?
Yeah, so definitely please don't sue me. It's my own thoughts. And um, as I said, like everything I do is from my perspective. People got to do their last mile and their own thinking. VMAD is actually, if you would ask me, like when I was building up this portfolio and I just got a little bit of it, if you would tell me it would be my largest holding in like some near future, I would not believe that. But the more research you do, the more thinking you do, um, you either get more conviction or you don't. And again, where it comes Twitter and common stock, you share these things, and when people come with good tensions, meaning genuine curiosity of why you're doing things, and you answer and you talk with them, uh, you start getting like feedback from people um, that don't think like you. So they might have some information that you don't, or and it's like putting a puzzle together. You have a big picture, but sometimes pieces are missing, and whenever you dig deeper, they just magically showed up as more research you do. So I'm actually in the medical supply business, but I don't deal with CPAP, BiPAPs, and this oxygen related items. So for me, I actually didn't want to invest it because I thought, oh, that's a stupid business. I did a little bit of it. I didn't make a lot of money. I was like, well, why would I be getting into something that I tried before, but I was not successful personally? But then actually looking at the team, what they're doing, how they're doing, and thinking of it like I'm buying a company. So I have another management who's handling it. I don't have to do day-to-day operations. They're pretty good at and they know what they're doing. So the more research I start doing, the more thinking. There's some people that start asking me questions. There's some people who start giving their opinions. They share another person's opinion, and that person has something written. And there's this CEO who talks about these things. And the more the pieces just start getting together, it became a clearer picture. Uh, the problem is it's a small cap. So all the information you have to really dig deep, and if you're not willing to do the research, it could become like a barrier of entry for you to do. Because I really had to. I mean, I think I pretty much read everything there is on that's public on VMAD, and probably I'll say that this is the only company that I did that like with confidence on that because really like I don't know some of the things that I got to. I don't even know how I got into that black hole. But the more I did it, and I hope it's not confirmation biases on my end, I felt like um, they were doing the right things. And then the questions that I had for the management that I never asked, like my own person in my head, they were following through and executing on the things that I want them to do without even me, speaking to them. And they were just, the earnings call, and I listened to all of that. And I just bought into the idea of what they're doing is possible, and I believe that the company is um, underappreciated by the market or what they do. And I liked it so much that I decided to even write a whole deep dive on it. And with limited time that I have, it's one of the few that I actually did, and I'm happy that I did. And you, with the small cap, you really have to learn and observe as much as you can before you can invest. And I personally, just after doing all the research, I decided it's worth my time. And as it kept going lower, I just kept buying it. So I really have a problem with buying things as they go down. Like, that's just my trade, that I'm actually more afraid of buying them as it goes up. That I'm not comfortable with. So the lower it goes, the more I keep buying.
Gotcha. So, final question on VMid is what would make you change your thesis on it and, like, I guess, make you sell or get out of that holding?
Their whole revenue right now, it comes from big providers of Medicare, Medicaid, which are government sponsored. If they lose the contracts, that would be even like one of the two. No, Medicaid is not as big. So the Medicare, if they would lose even partial states, they start getting their license revoked, that's a red flag. And another one that they're working on right now, what's it called? Veteran Affairs, VA. So they're working on it. So if they're not able to get that contract within the next 2 years or make a bigger progress, that would be a red flag to me too, because they're trying to go away from that only being relied on Medicare to having VA revenue. So if they can differentiate their revenue more, that'll be like a yellow flag going to a red flag. Otherwise, I mean, they're saying that with everything going on, they're happy in the sense that they have supplies. So they bought things before things got bad. They were oversupplied. So now that there's shortage of supplies, they have enough ventilators. People want to work for them. So they have enough respiratory therapists to keep fulfilling. And for better or worse, people still smoke, people getting older, people having oxygen-related problems, and they're there to help them. And whenever they get more people, that means that's more revenue. So the more people they're trying to help, the more money they can make.
I gotcha. Cool. Well, that makes sense. All right. Well, we're getting towards the end of the interview here. So, last question before we wrap it up is what advice would you give to new investors getting into the game?
Uh, Start with ETFs, dollar cost average with ETFs on whatever basis of weekly, monthly, bi-monthly, whatever you can do to make it consistent while learning about individual investments. So maybe you don't have to buy them, but you can paper trade them while having the ETF actually snowball the money, because you don't want to personally, if you have zero experience, I don't think you want to go right away dive deep into individual company with your own money, but you also don't want to not save anything or just have them in like savings account where they don't really work for you while you're learning about the company. So you have them. That's the way I personally did. So while I was learning, I had them in ETFs that were dividends and making a little bit of profit. And when I was ready, that's when I transitioned. There is no like strikes out. There's you do what works for you on your time frame, but also you have to make sure that you're constantly pushing yourself to get better.
I agree 100%. Thank you so much for your time, Igor. Why don't you tell everybody where to find you and what you got going on?
My pleasure, and thank you for having me. You can find me at this point pretty much Twitter, comment stack at from 100K to 1M, and I write right now monthly portfolio updates and just monthly posts on from 100K to 1M.com on a monthly basis. That's pretty much it.
Awesome. Well, thank you so much. Everybody go check him out from 100K to 1M on Common Stock and Twitter, and from 100K to 1M.com. Igor, thank you
Thank,
so much for your time. I really
thank
appreciate
you
it.
very much, man. Bye bye.